Yes, emperors. The emperor is bankrupt, my friends. Welcome to tour day number 2 with me. This was our overnight spot. Tiny little peek at the tent. Nice bed inside there. The machine, all top box open and sprawling. Not at its most tidy moment. This, by the way, is before I go into the title, which is The Emperors Are Bankrupt. I'm going to show you this beautiful 100,000 liters an hour artesian well that's coming up and bringing water here. Beautiful clear water, literally drinking water. I was swimming in it last night. I did my cold water submersion this morning in it, and I'm properly awake, and it's absolutely magnificent. Funny enough, this isn't the Kalahari yet, by the way. It's too green and lush. But this was our day one ride, finished destination, and here's where we ended up. Anyway, what was I going to talk to you about? Because this is financial as well. Well, I'm going to talk to you about the fact that the emperor is bankrupt. So let's start with the UK pension side of things. So the superficially black man was thrown under the bus and fired. A new man, which suddenly meant to give new opportunities. Oh, we'll fix it now. We got the right guy the second time, as if you should buy that. And his surname's Hunt, and he was deeply unpopular for the National Health Service that he toiled under. So Truss has appointed Hunt, and I'm not a fan of him. No relative, I assure you. Anyway, so what's gone on is they said up until Friday, that was yesterday, we're Saturday today, and it's day 2 of tour. They said you've got up until Friday, the pensions, to sell whatever you needed to sell for your margin calls, your liquidity requirements to make your pension payments. So in essence, that's exactly what they did. And the reason the Bank of England, Bailey, did that is because no pension fund, it's a bit like during 2008, nobody wants to admit to being bankrupt by taking the funds. So the real reason I think he did that, saying you have to do it by Friday, is to force everybody that needed cash requirements to do it and get a lot of people to do it, so no one institution gets stigmatized by doing it. The real fact is there's no way in hell he's going to be finished with this action that he needs to do on Friday. Nice little pier here. We were all charging off with red wine inside us and jumping into the water last night. Some not so well clothed as well. Sounds a bit GAY, but no, the Red Clay Biker Brigade are pretty hardcore and wanted to get properly cleaned up. Anyway, so back to Bailey. Bailey put this, what I call a fake deadline on it, and I'm going to explain why further, on the basis that he needed everyone who needed any form of liquidity to just do it and get done with it. Well, they will never get done with it. This is the catch or the rub. But he wanted them to start, because otherwise everybody just stood in the line saying, I'm hungry, but I'm not going to put my hand up to say I'm hungry. I'll just stand here and slobber out of my mouth. So he said, listen, the food's been taken away in an hour. That which isn't eaten is thrown away. And then they stormed the tables. 19.1 billion of money was actually liquidity was provided to take the shit assets off their balance sheet, basically, and I call them shit assets. It's not a technical term, but it's because they are hyper overvalued. However, the irony for the pensions is that rates have spiked and they're underwater on all of them. So they've been buying bonds throughout this 40-year bull market, particularly in the last few years, at an epically overvalued level at very low interest rates. Again, you've got to remember, the higher the interest rates, the lower the value of the bond. And so with this epic push up in bond rates, they're being forced to lock in losses, which they don't want to do. But it's kind of like the game, your first loss is your best and biggest loss. my apologies, your best loss and smallest loss. Let's get it straight. The later losses turn out expensive ones. Guys getting in their coffees there, checking the bikes. So what actually happens is nobody's in a hurry to lock in a loss. But there's nobody who's going to come and turn this rate story around. The Fed is essentially turning the pain screw. And we said this, they were going to turn the pain screw, and they were going to continue to turn the pain screw, and everyone would feel the pain, and it's part and parcel of almost controlled demolition of the financial system. Lots of interesting bikes here for those that want to see. I think that's a yummy Tanier. The good old classic KTM 990s. Those are very good for the enduro. You can appreciate what a brave man I am doing a GS when we got all the enduro bikes. Yeah, it's another KTM 950. We've got a man on a GS here, classic old KT for the young lads. That's one of our regular guys has brought his two sons who like motocross pros. He does half the tour on his back wheel and the other half on doing endos on this, but so it's a proper enduro bike. That then another Tanier Yamaha T700, a 690 single pot KTM. I have that same engine on a 701 that I have, and then another GS. Anyway, so what's actually happening is these pension funds have got to admit that they've overpaid for those bonds. They're taking a loss, and they're not really in a hurry. So it's a bit like they've got to take medicine, and nobody wants to take it. Now, how much did they spend? The Bank of England, 19.1 billion. Liz Truss says, okay, we're going to reverse that tax cut we were going to do. It will secure us an extra 18 billion because the government, that's the fiscal side, spending. The Bank of England is the monetary policy side, that's the interest rates side, and the banker of last resort. The Liz Truss and her now new guy, Hunt, is saying, no, okay, we reverse this tax thing, we'll get an extra 18 billion because they got told now, everybody wet the bed and killed the pound because they are overspending by giving tax cuts. In other words, they were going to lose income. But actually, it's not entirely true. When you keep the high tax rate, you get short-term revenue, but you get less businesses opening in your country because it's less attractive. People get more efficient in what they're doing, and they also sometimes work less, especially on the small and medium-sized businesses. Generally, the big corporates, they tend to have all sorts of clever schemes that are set up, and if you push tax rates too high, eventually they move part of their business offshore, they split product lines and they make them resident somewhere else, etc., etc. It's quite nice grounds here, by the way. That's our logistics lorry with all our trunks where we can drop stuff. Anyway, so with that all said, she thinks she's going to get 18 billion, and the Bank of England has just blown 19.1 billion on providing liquidity for the pensioners to get their cash pension payments because the pension funds had run out of cash and had to sell, acknowledging losses, taking their medicine on investments they made that are underwater. And this is what I say. How many times have you heard me say, how do things happen? I'll never sell my Bitcoin at $10,000. I'll never. Wait. You get what's called a forced seller. The pension funds are forced sellers of overinflated debt instruments they bought at a higher price. And they got told, do it now, otherwise you'll never get to do it, and it'll go lower. We won't put a bid under the market. So first loss is best loss principle. And 19.1 billion. Now, will he be out the market, our friend Bailey, since after Friday was yesterday? The answer is no. He will not, because they're going to run into cash margin issues again, because the investments they bought are crap. The interest rates on American debt is going up, and it's going up quicker at a faster rate on British debt. So that's where you're at. British debt is getting up more expensive, going up at a higher rate. So what effectively happens is they're going to be needed again. And that's a threat rather than a true statement. They don't have the means. They don't have the means to never go back in there again. They can't let... There's 11 million people in the UK with defined benefit pension schemes. Those are contractual commitments. I've always said the long end game is they renege, but they can't start by reneging now. That's one of the things you do last. What they'll do is they'll allow a much higher level of inflation to devalue the debt that they own. So they're going to print up more money. It's going to create more inflation. It's going to cause a currency to go down. A currency going down will also cause more inflation, because you're going to buy oil in dollars, gas in dollars, and you're then going to end up in a situation where, okay, you're devaluing your debt that you owe, because that which you borrowed 10 years ago, which was a lot of money then, say 10 billion, is now a much lesser money after you've printed up hundreds of billions and you've killed your currency. So currency crisis is the game for Britain. They will choose inflation, otherwise they choose bankruptcy of pension defined benefit pension schemes, and that's a major governmental failure as well. It's more damaging a failure than a relatively slow compounding, eroding inflation, which will actually come quite fast and furious. Year on year, people will notice that they've almost, losing 20-25% buying power, and in some categories even more on an annualized basis. But it's less damaging than going, yeah, we're the government, sorry, you're not getting your pension. And for the government to take on, if companies fail and they haven't got enough, so companies took holidays. So let's get this straight. The central banking cartel created pumpermentals, where during globalization, that was the 90s through to the 2000s, the noughties, they allowed the stock market to pump because there was no inflation. They created so much liquidity. This was the beginning of the pump phase of the pump and dump scheme. Every central bank, Greenspan said, it's a miracle economy, a productivity miracle. Rarely have we had so much feel good. There was mass affluent reports. I worked for a company, we were doing, everyone who owned homes was now part of the mass affluent and qualifying for just below, high-end private banking. In the UK and in other places. It was the great mass affluent, and this was all because you had very low interest rates, a lot of debt, new money being created, a lot of assets going up in value. It was the beginning of inflation, but it was asset price inflation which made everybody who owned an asset rich, including homes, particularly on a small island like Britain. So what actually happened is the central bank cartel globally synchronized that. The leper colony. Australia had one of the longest. They skipped through the GFC because China started printing when the rest of the world went into downturn. But every major nation, including the US, had this great property boom. And this was the pump phase of what's now coming as the dump phase. And now during that period, corporates, they were always having to pay money. Corporates that had staff were paying contributions into a pension pot. They would take money off your salary to pay into a contribution for your pension pot. And for example, in one corporate I worked for was 6.5% you paid percent, and you got 12% contribution from the corporation. So you got the 6.5% came out of your salary before tax because it was a pension. And they supposedly topped up 12.5% each time. But what started to happen is they started to have a lot of money in those funds because all the equity market ran, the bond market became a monster big and high value because the interest rates kept going lower and lower. So bonds kept going up in value, that the corporates took top up pension contribution holidays. And they declared bigger bonuses and earnings and paid bigger director salaries on the basis that the pension was more than well stuffed, because it was stuffed full of equities that were all going up in value. It was stuffed full of bonds that had gone up immensely in value, and so they stopped contributing. Now we get the crashonomics, the dump phase of the pump cycle. Equities down and bonds having the worst year since 1700 and whatever you want to call it, losing an absolute fortune. Bonds are supposed to be super slow, boring instruments. They've lost like a stock market crash. It's just unheard of. So inside of that environment, what you actually have is a whole host globally of defined benefit schemes. So this affects, if you're American, you have defined benefit schemes. If you're Canadian, you have defined benefit schemes. If you're Australian, you have defined benefit schemes, and large parts of Western Europe have defined benefit schemes, all of which are contracts, all of which have had big fat corporates pay less money in during the pump phase. And now you come to the dump phase. And the Fed is turning the key and the screw on fighting inflation after creating a 6 or 7 trillion pump and giving it in stimulus checks to entrepreneurs, small business owners, etc., where they all sat at home and watched Netflix and pulled salary equivalent to what they did, and some of them ran a second hustle and made money. So what you've essentially got now is the dump phase. All defined pension schemes, I would venture, are under-resourced for the further losses to come in the debt market. The debt market's losses are going to fall because interest rates need to rise. If the Fed just goes to 4.5, never mind 5, I don't even know how America makes payment on its own debt. So there is going to be such a shortage of liquidity because everything will be going to loan payments, and there will be bankruptcies and non-payments all over the place. So what happens to your defined benefits scheme with, say, IBM? When IBM finally declares bankruptcy, it can't do it. It's the only way it doesn't pay on its defined pension scheme. It has to go bankrupt. Okay, then the government of the day picks up the can. Well, how does the government of the day then pick up the can for all these corporates that will go bust? Mega corporates, by the way, who are underfunded in their pension schemes, are going to be making less money, and whose share price could lose 30% from here, 40% before going bankrupt. Well, what happens is they print money. Simple. The same solution. It's the only solution they have. And what you do is you continue to get inflation. So you get paid in diminishing dollars, pounds, euros, your pension, so that you have quasi been honored in terms of what was paid, and it buys you nothing. In other words, you had real money, fiat, taken out of your salary, especially in your early years. You continue to contribute and you get rolled up, much later paid back the amount you should do, but that amount is significantly less in real terms 30 years later than it was when you first started contributing to that fund. And that is how they will do it. So it's kind of like, I remember, you'll get R1 million. When I joined, my first job was actuarial student for a life company, and the local broker would come and have a look and tell you, try sell you a life policy, and that sounded like a lot of money. Like R1 million, you contribute this for the next 40 years, you're going to get R1 million. It's like R1 million now. You buy a sub-economic home for R1 million in a very dull area if you're lucky, cash. It's just nothing anybody could do anything meaningful with. There's most decent cars are in and around R1 million, just average, like sort of rep mobiles. I'm not talking high-end Mercedes or the new Range Rover Sport, for example. That's going to be 3.5 million. So the whole point is that they're going to renege by inflation, and this is why I've always warned and said the main game of central banks is inflation. That is how they steal from you. It is a sophisticated hustle and steal. They devalue your measure. They control the measure and they devalue it. That's it. That's the game. So you pay in today's valuation, and it's a massive chunk out of your wage, and it's a lot of money, and you contribute forever and ever in a day, and then they renege on you by devaluing it so much that it becomes a pittance of a measure by the time you need it. They put you on the wrong side of a compound interest equation. How many times have I said that phrase? For the last 5-7 years, I've been explaining that you get put on the wrong side of a compound interest equation, which in this case is inflation, by a central banking cartel. They essentially steal from you today big, meaningful chunks on the promise to give back to you later on a highly diminished valuation of that fiat currency. So what do? You get sovereign, you get gold, you get silver. What you own physically is literally what you will have. You watch out on having too much property. Be paid off so that they can't weaponize interest rates against you and turn you into a tenant in your own home. And within that, be wary of wealth taxes when you are a survivor, unlike all the others. And if you're a survivor like all the others, and one of the things is they'll come for you next. But first they need to bankrupt all the easy killings, and that's what you've got to avoid. Okay, so we'll be starting from here for day 2. I'll actually be filming on the bike this time, and I hope tonight to have some files with some of the roads and rides and further thoughts on this during the course of the day. I'm gonna go get a coffee, get ready, and be talking to you soon. Thank you for hitting the likes. Thank you for being part of this series. I'm committed to every day putting up content on the tour and taking the headlines of the day and giving you the lowdown on it. And the UK pension, the emperor is bankrupt. Where does the headline for this video come from? The emperors are bankrupt. This is the Western malaise. Because you see, in Russia, the government just pays a pension, and it pays it out of its resources and everything. After the great crash of America, which comes last of all the Western nations, everyone will see and say the old Western emperors were bankrupt. The tide went out and they had nothing but a debt-based Ponzi scheme they had created. The dark banking had over-leveraged during the extremely low interest rates era, and any turn in interest rates is causing huge knock-on effects. And this was all put on Kwasi Kwarteng, who I don't know and don't care for. I don't trust any government of any variety, especially World Economic Forum ones. But he was thrown under a bus by an incredibly long economic cycle, malfeasant investment, super low interest rates during globalization, which Alan Greenspan is personally responsible, and Mervyn King and his Bank of England heads before, that all allowed a huge asset price bubble, a major pump scheme that's now seeing a major dump in valuations. And now nobody should want the job of Treasury. Nobody should want the job of Chancellor of the Exchequer in the bank. No one should want to be the Bank of England boss. Bailey deserves to be taken more down, and all his predecessors that were at the Bank of England, including every girl's worst boyfriend, old Mark Carney, and the rest of them. And they are getting away scot-free for the pumpermentals and the subsequent dumpermentals that started in 2008. The dark state, the dark banking system is far too leveraged and large to afford higher interest rates. The Fed turning up on the interest rates is a controlled demolition of the financial system that will lead us into bankruptcy. It is going to be reported as the great policy error ever made, and I tell you now, it's with intent to bring in the new system. Okay, day 2 of tour. The emperor is bankrupt. I'm Francis, the crypto sniper, the market sniper, and the reset sniper. Give us a like and a share. Thank you very much. Catch you later. Bye.